Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 23rd. I just want to say thanks to you guys for everybody for being patient yesterday regarding the blog, the video blog yesterday, as I had to complete this before I went out to my conference yesterday. And wow, what a great conference it was. I'd like to share with you guys some of the highlights at the end of this video, which I think a lot of you might find interesting. Some great new loan programs that are coming out that we are introducing May 1st. Love to share with you guys, and I think, again, you guys could be wowed. But first, let's go ahead and touch on the economic data. Since the data didn't come out on the existing home sales for yesterday's, I included it today. So the existing home sales for the month of March, we had 488,000 or 4.88 million existing home sales for the month of February. Forecast is supposed to go up to 5.08, and we actually exceeded that, 5.19. So yesterday actually had pretty decent numbers for existing home sales. So that's good news right there. Now for today's data, we had the weekly jobless claims. We had 294,000 people apply for unemployment. The forecast was supposed to reduce down to 288, and actually went up slightly to 295,000 people. So slightly more people applying for unemployment. We also got the market PMI flash. This is the manufacturing numbers here. So anything above 50 on this type of index is basic expansion. Anything below that becomes contraction. So as you can see here, we had a 55.7 in the month of March, and it contracted down to contracted. It's still expansion, but it moved downwards, decreased down to 54.2 for the month of April. Now we also got the new home sales for the month of March. So we had 539,000 back in February. Forecast for March was supposed to be 504,000, and actually even pulled back further than we had anticipated, 491,000. So overall, not so good economic data being released today. So not such good news here. Now earlier this morning, the stock market was actually down across the board. We had mixed earnings reports that have come out. We had in Europe some disappointing PMI reports that came out. So the stock market was actually down. As we progress through the morning here, actually now the stock market is up. And a lot of that, they're disregarding the mixed earnings reports. A lot of them, they're saying some are narrowly making profit. Some who are missing the boat or did not meet their expectations. They're figuring because it's a low interest rate environment that they'll rebound. So they're kind of shrugging that off, as well as economic data. And they're kind of looking more at figuring, okay, oil prices are going up a little bit, so they got a little higher oil prices. The dollar is weakening a little bit, so and then also some seasonal bias. So April, May tends to be more of a bullish market in terms for the bond or for the stock market. So they threw the seasonal bias in there. Now, higher oil prices obviously plays a factor as we've been losing some jobs in the energy sector. But the weakening dollar, as you can see, some of the last couple of reports we've been seeing in the manufacturing have been dropping quite a bit. And of course, Europe has been struggling a lot. So they're not able to really buy our manufactured goods over in Europe and other places because of the stronger dollar. Their cost is getting to be too expensive at many of those. So as a result, is suffering on our manufacturing side. So this is why you're seeing a little bit more improvement, what the investors are looking at, and why they're kind of a little bit more optimistic in this sense. The bond market were down from where we started the day yesterday. So we actually had a price for the worst. So we had an intraday pricing, which means that they changed prices and the pricing actually worsened through the day. Today we're kind of about where we left off for the day. So pricing is about the same. We're only up about 1 basis point, which doesn't make a difference. It's almost about even from where we left off yesterday. So it's not a factor. So I would say from where we left off yesterday, it's basically about the same interest rates. With yesterday, worse with yesterday with that price for the worst price, big priced in there. All right, so now kind of share a little bit of some of the stuff that we had with my company. Really kind of impressed with American Pacific Mortgage. That's the company I work with. They created a charitable foundation. Not to make this too long, they created a charity foundation that us loan officers are going to partake in. Really kind of looking forward to help those who need shelter and kind of with their lives. That's kind of great news. Some of the new loan programs, which I really excited about here, were with CalPERS and CalSTRS kind of moving away. Teachers, firefighters, the police department, we felt that we're kind of underserved department, so we created a new program to reduce their closing costs and reduce our fees. So instead of, so basically we're able to reduce it by $800, and it's called the STARS program. Other ones are, get this is going to be for real estate investors, seasoned real estate investors. They're going to love me right on this program. We have a new program, so regardless of whatever Fannie Mae has, let's say you have 10 finance properties, you could even have 20 finance properties. We can finance your investment properties with up to 10 properties with $1 million max at each property. So in theory, you could have 10 properties with us at up to $1 million apiece, so $10 million in loans with us. And also, and get this, on top of this, did I say there's no tax returns included? It's based on the property, the cash flow of the property. This is a make sense loan program for real estate investors. They're going to love this program coming out here. We got another program for bank statements. So for people who are self-employed borrowers that don't write too much on their taxes, can't really show their taxes, we got another alternative program that can help you qualify by looking at your monthly bank statements. We're going to look at your deposits, your average deposit over a 2-year period, and use that. So we're not even going to, again, another no tax return loan. So basically, in all essence, we got some new no tax return and no 4506T loans coming your way. So call me if you have any questions, but over the next couple weeks, I'll go ahead and I will start talking a little bit more specifics on these. These new programs will be kicking in on May 1st. As I get more information, I'll be releasing some of that out to you guys. But I'm really excited about this. All right, have a wonderful day. Thanks so much for watching. We'll catch you guys tomorrow. Sorry for the long delay here.